Hi, welcome back to Stock Talk. This is Joe Rabil. So I'm going to start today's show with a lesson, as I always do. In the lesson today, I'm going to try and simplify things somewhat. I'm taking off most of the indicators, and I want to focus in on one simple moving average that I think can be a huge advantage to anyone if they understand how this plays out. Now, one of the things I try and explain is that the entry side of the equation always plays out a little bit differently, and that's what makes life so much more difficult when you're trading. So I want to get into that before we go through the market and the symbols that came through. Okay, so I've got stock TradeWeb, TW, and I've got a weekly chart on the right side and a daily chart on the left side. All right. Now I wanted to simplify this, and I took off. I typically have a 40 moving average up on all my charts along with the 18, but I wanted to really zero in on the 18. I also don't have any indicators. The only thing I've got down underneath is the volume. All right. It's because I want you to understand this. And I think sometimes you can get distracted by looking at all these other things. So let's just focus in on this one moving average line and how it can help us really pinpoint what we're trying to accomplish. And I'm going to show you how it's always different. So here's the higher time frame. This over here is our higher time frame. All right. That is telling us this is essentially why we are doing in trade. We're looking for an entry on this time frame because it has a trend and we've pulled back in the trend. All right, there's three different examples back to back. And this is the reason why I picked this out is because each one of the entries are different and they show up differently, even using a simple moving average. And I want to show why. So, but what we're looking for is on the higher time frame, we're looking for, strong move to the upside and then a pullback, strong move to the upside, then a pullback, strong move, then a pullback. And we want to look for entry at or near this moving average. If you notice, this moving average is rising, nicely. It's got a good slope to it. We don't really want, if a moving average is doing this, we don't really want to buy bull pullbacks or sell rallies if it doesn't have a true slope, right? Sort of like here, we tried to hold it, then we couldn't, and then it kind of failed, and then it failed again. We don't really want to mess with this until we get more confirmed evidence. Here's confirmed evidence, a lot of strength. We hold this area, and now we've got a trend. All right. So we want to buy pullbacks within the trend using this simple moving average as a guide. If it's rising or if it's falling, either way, one way or the other, doesn't really matter. But if it's doesn't have respect, meaning price is going above and below it and not really respecting it, or it doesn't have a lot of slope to it, if it's more flattish, then we kind of want to avoid trades on the higher time frame. So that's our higher time frame. The lower time frame showing here on the daily chart. So our first entry is pulling back to around $80 right around October. All right. So we get down here, but we have a declining 18 at this point, as this is at the low point of the move of the pullback. We have a declining 18 on this time frame. What we're looking for is a match. We have a rising 18 on this time frame. We want to wait for this time frame to also have a rising 18, or at least something, an 18 that's being respected and starting to turn to the upside. So in this case, we hit a cross of the 18. We don't test it at all. We cross it, and then we're looking for that first pullback area, right? So now we have a pullback into a rising 18. We have a match. We have a rising 18 here, and now we've got a rising 18 here we've pulled back to. All right, we crossed above and then we pulled back. Now, in the second instance, we pulled back to this rising 18. And in this case, we actually rallied up and failed at the 18. You see how that didn't happen on this one? We didn't really have that true rally up and failure. And then look at the way this played out. It was declining up until the day it crossed above with this big green bar. You get this monster green bar to the upside, and the moving average flips to the upside. Now, I tell in my course, I explain this a lot. The big green bar is incredibly important. We want to be on the lookout for these big green bars, and we want to use them as entry bars. And you could wait to the next day, maybe look for a little pullback or something like that. But the fact is that we are entering as this is matching this, right? We've got a rising 18 here. rising 18, right? Now we're looking for that rising 18 to take place in this instance, but it's different. This time it crossed above and pulled back to it, and this time it failed at it and then had a juggernaut bar through that bar that turned it to the upside. Both of these are entries, in my opinion. All right, now let's look at the third instance. The third time we pulled back here, orderly pullback to a rising 18. Again, we respect this 18 over and over and over again. This time we fail at it, we pull back, we undercut this low, and then we cross above, but we don't show any air. You notice how when we did it back here, we created some air and we were looking for a test. In this case, it just stayed connected to it for 3, 4, 5 bars while it turned around. You see how while it was connected to it, it didn't show the dynamics to the upside and then pull back to it. It basically stayed connected to it while it turned to the upside. We start to see some strength with this green bar showing up. And now we're above a rising 18 on this time frame. So above a rising 18 there. Above a rising 18 here and above a rising 18 here. And all of those are the same signal, just showing up in slightly different ways. That's why the market is so hard sometimes. We can play these patterns and you can read about them in books and you're assuming that they're all going to look the same. And what I explain in my course, and the reason why I have 4 different entry strategies, or what I call triggers, is because they're always going to look a little bit different. They have a slightly different shape to the way they play out, and you have to be prepared for that. If you're looking for the exact same thing every single time, you're really going to struggle, all right? You're going to miss a lot. You're going to jump the gun. You're going to get very nervous. You got to understand what we're looking for and what we're trying to play, and then you know when it can show up in a number of different ways. So I thought this was a great example for you to be able to see how you need to adapt. It's a simple strategy. We're buying a pullback to one simple moving average, and we're looking for the lower time frame to sort of confirm. We just have to be able to adjust to the slight nuances. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com. You can also find information about my courses as well as my book, which is probably a pretty good place to start. So go ahead and take a look if you have an interest. So as we move into the symbol side, I want to show what some of the power of ACP here. And I've got 11 charts up, which are all of the sector spiders, right? The major sectors here. And one of the things we can do, and what I did was I basically just simplified. I've got my simple 18 and 40 MA lines on all of these sectors, right? And then underneath on the scale, I've got the relative strength versus the S&P. And I've overlaid a 30 MA on top. All right. So it's almost about a year of price action. And one of the things, so you can just have an extra tab up. So this is the tab that we're going to go through when we go through the symbols. But I've got this, I can just flip back and forth very easily. But you can take a quick look at this and just see what is taking place. I mean, one of the things that I'm noticing as I go through and look at this, number one, we've had really some pretty impressive action in both the financials and on a relative basis for both the financials and the industrials here recently. And they've been showing a pretty good trend overall. So the trend is good and the relative strength is confirming. All right. Now, if we look at what's taken place in the XLB, this is actually a pretty big breakout. We're starting to show signs where this moving average was declining and now it's trying to turn back to the upside. We've got pretty good price action in the XLE. This is trying to turn. Now, we know that this is pulling back to a key level. This needs to turn pretty soon here to get this to turn back up and get this moving average turned back up. So we want to see these moving averages of the relative strength turning back to the upside. We can also see that the utilities have made this incredible surge and that the moving average of the relative strength line is about to turn to the upside. But this is a pretty extreme move in terms of strength. We don't typically see the utilities doing something like that on a relative basis when the market is still in an uptrend. Also note XLP starting to show signs of life here. I mean, we've seen improvement in the trend, but haven't really had, up until recently, really starting in April, starting to see some signs of life and definitely some improved patterns inside the staples area. One of the things that I think jumps off to me a little bit is that we've made a new high here in price on the XLC, but this is making a lower high. So on a relative basis, what this is actually telling me is that this made a new high in price. It was really being pulled up by the market when that happened. It didn't really confirm on a relative basis. So we want to be on the lookout for this starting to roll over, similar to what happened to technology. Technology was making new highs here, and it was starting to show signs of divergence. Now we're at a very critical level. This hasn't actually rolled over, but it has flattened out, and the current level of the relative strength is below the moving average. So if we were to fail here and this were to show weakness and turn this down, I think that would be, the first sign of real concern that we've had since we bottomed a while back. So little things like that I think are interesting. Now, there's a couple things. So if you look at these two on the right, so this is what I find interesting when I go through and look at so many individual symbols. So there are symbols inside the XLV that are actually showing some pretty nice price action. But when you look at the entire sector, it really is masking that. You don't see it from a total sector standpoint. The biggest names in the sector really are controlling what this looks like, and they don't look all that great on a relative basis, at least. But I still think there's stocks inside this area I'd be on the lookout for. The same thing holds true with the XLY. I went through every single one of the consumer discretionary stocks yesterday, and I see that this is really down, but there are a significant number of patterns that are developing inside that are actually showing signs of improvement. So we want to make sure we're going and looking at what's taking place on an industry basis as well. One of the things you can do in this ACP now is they've got the sector summary. So I'm looking at the XLK. I'm seeing there's deterioration, but if I want to see where that's coming from, I can hit this on the bottom scale. I can go and hit this sector summary. All right. And all the different sectors pop up. I can hit technology. And when I do that, I can see I've got it sorted by its scooter ranking. You can see that the strength is in semiconductors, and the weakness is in computer services, computer hardware, and software. These areas are just not trading very well, and it's hurting the overall index. But the semiconductors are holding up very, very well right now. And I actually have noticed some electronic component and equipment stocks that are starting to emerge and break out. So I think you want to go by and look at all of these and then dig down in using that sector summary to quickly jump in and see what's taking place inside of the sectors that make sense to you. All right, let's go ahead and move on into the individual symbols now. So we've got this QQQ, which has made a pretty substantial move. We've got a couple different things that I think are worthy of discussion. So we had kind of a deep drop, but the moving averages stayed rising through this. Now, the MACD turned over, and what I say, when we have strength here, which is confirming strength to the upside, and we've got kind of like, not really divergence, but is like a little bit of weakness with the signal line break, we should be thinking that there's probably some consolidation coming, but don't think reversal. If this is strong, I tend to not think reversal. I think of consolidation. Now, if you look at this on a daily chart, the odds are we are going to try and attempt a breakout probably right now, somewhere over the next 24 to 48 hours. And then we probably form some kind of a pullback, because look at how overbought we are going into the breakout level. So if this were to pull back now and then try and break out, then I would say we could get some follow through on the breakout. But I think it's more likely that we're going to pull back and consolidate a little bit if it does try to break to a new high. So that's my read on this. I just don't think the MACD and the ADX on the daily chart are in a position to support this, especially when you break out from a pretty far level away from the 18. The 18 is down at 433 and we're up at 448 trying to break out. So makes more sense to me that we get some kind of a little mini pullback, especially when we look at this and we look at the relative strength line, which has been weakening. It's not necessarily confirmed, but what we're noticing on all the key indexes is this RSI buy signal, which had a deep oversold reading. I think we have to respect that. It's just when that happens with strong ADX, we have to sort of respect that the bias is to the upside. Yes, we could consolidate a little bit, but I would be thinking we want to keep working higher, at least for now. Now, one of the areas that we have to see improvement on, if we're going to see broader expansion in the number of symbols participating, is this Russell 2000 index, right? So I've been talking about this for quite some time now, and because I like to cover it each week. The monthly line, 18-month, is turned up. MACD has crossed back above its signal line and above the zero line. And then if you look at it on a weekly basis, we're trying to break out. We're forming a higher low. We don't have a whole lot of strength yet in the trend, but again, look at what's taken place on an RSI basis. RSI held the 50 level on the pullback, and we got a deep oversold reading, and now we're turning up from that. So I'm starting to think that we could start to see a transition where this relative strength line could break above its moving average, and I think that would be confirming evidence that we could start to see more stocks participating in a more significant way. I know there's been more than just 5 or 10 stocks participating. I'm not trying to say that, but when it comes down to looking at the number of stocks in the advanced decline line and all that, I think it'll improve dramatically if this continues and we get the relative performance that we want. All right, I want to look at this TNX real quick. I did have a few less symbol requests this week, so it's given me an opportunity to go through some key areas. Remember to send those stock requests in if you have an interest in hearing my thoughts on a stock. Look at what's going on the Treasury. So we broke the trend line. So this was the high right here. So we go back to the last low, and that's our anchor point for our trend line. All right. So then we go and we go down as far as we can without moving through prices, and we draw on our trend line. We know we have broken the trend line. Now, what I teach in my book and my course is that once we do that, we want to kind of frame this out. We want to draw in horizontal line here and a horizontal line here. So we got a pullback that caused a rally, that caused the break of the trend line, and then we got a rally off the low. Now we have this framed out. If this were to break down through here, then we're flipping the trend back to the downside. If in fact we turn back to the upside and break out to the upside, then this was just a pause in the trend. So I refer to this when we break the trend line, but we haven't taken out the high or the low. We're in transition right now. And when we're in transition, you expect more sideways action. And that's kind of what we're in for. That's basically what happened here after we broke the trend line. We went in transition and then we continued to the upside. So we don't really know yet, but this movement sideways is causing more volatility in the market. We get a lot of movement when there's a drop or up or down in this index. So we want to be aware of that. All right, let's look at a couple of areas that are showing a lot of strength. So we had a pullback. It was actually pretty sharp in silver. Made a pretty big move here, and then we sharply pulled back. But look at where it found support and turned up from. Look at the volume pattern. Big volume on the way up, lighter volume coming down. Look at the strength of the momentum here, and that's on a weekly chart. So that's a really nice pattern. Low ADX here, and in a low ADX that is now showing strength on this time frame. A great combination to be on the lookout for, especially if you're looking for individual stocks. Look for low ADX on the higher time frame. Look for low ADX on the lower time frame that emerges into improving relative strength. And you're going to find stocks that have the potential to be pretty explosive. Now look at what's going on with copper. Copper had the same pattern. Low ADX monthly, low ADX weekly, and now look at the strength of this. Look at the strength of this move. This is turning into a powerful breakout after a compression based consolidation. And obviously it's a little overbought. I mean, I think this needs to pull back, and I would be on the lookout for, you can see some of the stocks like SCCO or FCX that are, and there's a number of others that have made pretty strong moves in this area. We want to watch for the next pullback because I think there's more coming based on the strength of this weekly chart. So let's look at CTRA. So this is a little bit different. So this is in the E&P area of energy, right? But it's still in the commodities. So we talked about silver, we talked about copper, we can look at gold. I mean, they're all trading pretty well. Look at what's going on with this CTRA. And what's generally going on with energy is energy made a really nice move to the upside, and now it's pulling back, and it's pulling back pretty sharply. So we want to be on the lookout for the ones that are holding up. I think this is all actually holding up pretty well. But the way this is playing out, I think what I would want to do now, we've got this pattern, but we don't really have a good trend line to draw in. So the MACD is above the zero line and we have low ADX. So typically, and what I teach in my course is I want to draw a trend line and try and get in as quickly as possible when it's in that situation. But in this case, my trend line is way up here. I've got to make this sort of break out again to get involved, I think. I just don't think there's any other way to enter this at this point, but it is holding up really well. Definitely one to keep on the watch list and maybe put an alarm in. So I did want to talk about this SMCI. I mentioned the semis, how strong they've been. Now, this had a deep pullback after making a massive move to the upside, right? We were getting a pretty deep pullback. And it's one of the rare occasions, I want to show you this on a daily. So first on the weekly, we get the strong move and then the pullback, right? So the 2 time frame entry pattern, straight from my book, we're looking for entry on this time frame. So if we go to the daily chart, this is one of the rare times where we had the crossover where the 18 crossed down below the 40. We went in the zone and then we came down and we showed strength to the downside. This actually is what I consider my trigger 4, which is not only do we want to break the trend line, we want to break the trend line, we want to make a higher low, and we want to show improved green DI needs to confirm any kind of a play we're going to make, and you might even want to make this do a full 1, 2, 3 and get back up through the 1,000 mark since we're right below that big round number. But when we make this kind of a pattern where we make lower high, lower high, lower high, you want to really reverse the trend back to the upside before you get involved again. It's very possible based on what's going on in MACD that we can make a move up and then come back down and do something like that. So unless you're really going to trade off the hourly or something like that, you could probably do that if you bought a little pullback and played it for a move up to 1,000 or something. You could potentially do that if you're nimble, but I would be waiting for a strength and then a pullback and then make sure we get green DI to confirm that. All right, let's look at Microsoft here. The interesting thing we've got is that we had a pretty deep pullback, and the relative strength line is below its signal line. Let's zero in. You see how this has dropped down for the first time in a year? Now, that doesn't mean that it's rolled over. Remember, the moving average is still rising, but it's sort of an alarm sound because it's the first time it's happened in a year. We need to be aware of this. And I personally think we need to form some kind of a pullback and higher low before expecting this to just move to new highs. We had a big red bar on the weekly, and we haven't overcome the high of that at this point. So if we did that, then we probably have to respect it, but then it would probably look a little overbought. We'd still be looking for some kind of a pullback. So that's what I'd be on the lookout for. Finally, let's just look at this Tesla, which I think is a lot different. If you look at the way this is played out, look at the relative strength. The relative strength is down. Okay, we don't really have a trend. We have a downtrend in price and we have a downtrend in relative strength. So we don't even have a break of a trend line yet. Now, if you went down to the daily chart, yes, we've broken the trend line. We're pulling back. You could see a potential trade up to the monthly, maybe up to 207, 208, something like that. You could potentially try and trade that off the daily and the hourly. But if we're looking for some bigger turn, I think we're going to need to see a little bit more strength first and then look to buy a pullback. At least that's how I would follow it from here. Thanks for watching the show today. If you have any stock requests you'd like me to analyze on next week's show, send them to stocktalk@stockcharts.com, or you can just put them in the comment area underneath. Also, if you have an interest in learning more about some of these techniques, you can go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.